All right, guys, welcome back. So in this video, we're actually going to walk through some examples of businesses. Now, this one is an actual example. I reached out and I got the info. Somebody was selling this business. I blocked out the main identifiers to respect their privacy, but I want to talk through what they have. So they put out into the public and said, "Hey, I've got a website. It's driving about this much in revenue over the last, trailing 12-month revenue. Low expenses, low upkeep, low time commitment. It's a website that has affiliate links and generates revenue. So they produce content and they have links that, they get affiliate links for people clicking on those and going to products or other websites and things like that. So it's low maintenance and there's a seller financing hybrid option. And so reach out if you're interested." So I said, "Okay, let's have it. Give me the info." So let's walk through this and just talk through some of these options. I just want you to see that this is very, very possible and that these are out there all over the place. Okay. So they are asking for $275,000. That's the purchase price of the website, the domain, the assets associated with it. Okay. Now, financing option, it's 150,000 down. So you have to bring 150K cash and then the rest is financed over 2 years. So the 125 that's left over is financed over 2 years. They didn't talk all the terms there, but I'm sure it's negotiable to some extent. Okay, so we look here. We've got monthly revenue, average monthly revenue, $65.29, average monthly profit, $64.97. So we're spending, $32 a month is the overhead, right? And that's probably domain hosting, like website hosting. So very, very, very low expense. This is an extremely high margin. So if we think about it like this, let's run some quick numbers here. So we've got $64.97 is the monthly profit. We're going to times that by 12. So we've got $77,964. We're going to divide that by the list price of $275,000. That's 28%. So if we're thinking about our investment, we pay, let's say we just had the cash and we bought it for $275,000. Our cash on cash return is over 28%. And that's assuming that it just stays flat, right? If it goes down, obviously, or if it goes up, it would be different. So 28% cash on cash return, that's pretty good, right? Remember when we looked at real estate deals and you buying a physical actual property, some of those were much lower than that. So 28% cash on cash seems pretty good. It's already got really high margins. That's also pretty good. So let's keep looking through some of these details and see what else we can find that's interesting. So this business was started, it's 4 years and 2 months old. So started January 2018. So the assets include the primary domain and all site content and files, 2 redirect domains, and then social media accounts, Facebook and Twitter. So it shows the domains and then social media. Okay, let's check out earnings. So March 2022, it doesn't show, right? It just shows through completed months through February. We're in March right now, end of March 2022. It's on pace to do 9,000, which is a significantly higher than their average. So they're already on pace to come up here. So you can see the trend is growing, net profit and gross revenues are growing. Total revenue last month, total profit last month, again, very, very close. Total revenue over the last 12 months, this is the TTM that I talked to you about, trailing 12-month revenue is $70,922. Total profit, $68,395. Okay, so pretty good actually, right? Strong cash flow. There is a seller financing option for $125,000. You just need to come up with $150,000. Site traffic. So yeah, that's growing pretty steady since November 2018 to February 2022. That's growing quite a bit. So that's almost quadrupled, just about on average. That looks pretty solid. Here, more analytics, so domain ranking and SEO and page visits and backlinks and top referring domains, et cetera, et cetera, et cetera. And then you come to the point where the seller talks about this, right? So some might think like, why on earth would anybody sell this business, right? If they already have it and it's cash flowing for them, why would they sell it? What are the reasons? And you could think through a number of reasons. It might describe it in here. There could be a number of reasons, but that's a question on my mind. Like, why would they sell this business, right? Who would, if it doesn't take very much time? So if you're going to continue to use it, where would you focus? And they talk about, hey, this is what I would do. this is the strategy I would use to continue to grow this business. Have you ever had any penalty? No. Any other employees? No. Describe the work that you do. My main tasks are moderating comments and updating plugins. I spend less than 1 hour per week working on this business. That's not a lot of time at all. So essentially, you could go buy this business, have it on the side for a long time, and spend an hour a week on it. That could be your main business, and spend an hour a week on it. How often is content added? Is it outsourced, written by yourself? We have added about 20 articles over the past year, mostly outsourced. Okay. So some of that overhead then, obviously, sounds like is outsourcing, right? Hey, write an article on this topic. Okay. This niche, I believe, is tech. So I kind of do like tech consumer reviews on tech gadgets and things like that. Computers, stuff like that. Okay. So listing details. So it just goes through all that. The point here is that, oh, here you go. The business generates 62% of its revenue from display advertising and 38% from Amazon associates. Traffic is mainly organic, primarily. Top 3 countries, US, India, and the UK. Seller spends an average of 1 hour per week moderating comments, updating plugins. Included with this business are the domains and the assets. So 6,000 plus subscribers on the Facebook page and Twitter account with 2,000 followers. And adding more categories, more verticals for different content and repurposing them into YouTube videos. That's kind of where they see the opportunity. So they come out with a really good list. Adding more content to current categories, creating new categories, and then repurposing it to go onto different social media channels like YouTube. Risks: Google algorithmic changes could cause traffic to fluctuate. If you're based, they're getting the vast majority of their traffic through SEO, right? Organic traffic, so like searching and then finding it and clicking on it. So if that changes, right, your SEO could drop substantially and you get less visitors. So advertiser changes can affect the earnings per click in your display advertising account. So yeah, your affiliate links, maybe they change the amounts that they're paying you. And so that lowers revenue as well. So as you're coming in to approach the business, then you got to think, hey, what would I do to mitigate those risks? I could, number one, start looking at other sources. Organic's great. We can focus there. But maybe I want to start creating other channels to drive in viewers to my website, right? And you can think and strategize through that. And then again, create new partnerships with other different affiliates and things like that, where you mitigate the risk of some of your sponsor affiliates, right? Your advertisers, some of them dropping rates substantially. Maybe you can spread out and diversify that a little bit more. So you have a lot of different revenue channels, right? From different sources. Work and skills required: moderating comments, updating plugins. Because you're not actually writing content. You might not know anything about technology. You can always outsource it, which is what they've done. Update plugins, you could outsource that as well. And then seller support: is willing to offer 30 days of email support, 2 Zoom calls to ensure a smooth transition to the buyer. All right, so that is one example. That's all said, that's a pretty good option, right? There are deals like this all over the place. And so if that helps open your eyes at all to the possibilities, now you can do the math and say, okay, well, I could seller finance it. The 125, I've got to come up with 150. So how do I come up with $150,000, right? We already talked about it. You can do home equity lines of credit and personal funds, 401k loans, S blocks, so securities-based line of credit. They probably are going to move this pretty quick. So I don't know if you have time to get approved for an SBA loan. Maybe you raise some money. Maybe you go get a loan from a private investor, right? Maybe you pool some friends' money and a couple partners all go in and say, hey, we're going to contribute this much and buy it, and we'll all own a percentage of it. There's a lot of ways to make this one work, but 28% cash on cash, plus it's growing. That's fairly attractive in my opinion, especially for 1 hour a week. So there's one example. I'm going to jump into a couple other platforms and talk some other examples in coming videos. All right, see you soon.
Real moves, real results.